The gradual emergence of the Chinese economy from its zero-COVID restrictions and the ease in input costs has lent support to stocks of metal companies recently. In the past week, the Nifty Metal Index has bounced back by over 4% as investors grew hopeful of firm demand ahead. In comparison, the NSE Nifty Index gained 0.7%. Market experts, however, believe that China's reopening may not lead to any significant pickup in demand for metals amid persistent global worries and China's cautious growth target.
So I think looking at the current data and expectation of Chinese reopening, personally right now I don't think it could be a big demand driver for metals like steel, aluminium or copper. And the domestic sectors like travel, tourism, service should benefit more with the China reopening. In addition, with the recent announcement and the GDP target of 5% which China has given out, I think it's in the lower end of the spectrum. And unlike previous times, like, once after the financial crisis and just, after the COVID, the kind of appetite they had announced, I think this time the boost is not there. So I would not lay a lot of emphasis on the demand for metals picking up just because China is reopening.
That said, companies are likely to see better spreads and margins in the ongoing quarter amid declining prices of key raw materials like coking coal and a rise in hot-rolled coil or HRC prices. Last week, the spot HRC spread rose to 27,050 rupees per ton, which was the highest in the last 2 months as coking coal prices fell 11% on a weekly basis. According to ICICI Securities, the improvement in domestic spot spread due to lower coking coal price comes as a relief for steel players. However, we believe that China still remains the key. While the real estate market in China is showing initial improvement, we await more clarity on stimulus measures and their impact on the overall steel demand. Maintain our cautious outlook on the sector with JSPL and Shyam Metallics as our key picks. Meanwhile, the domestic demand for the sector is likely to remain robust given the government's infra push.
Domestic demand in India is quite robust, and Q4 being the strongest quarter, domestic steel mills are not facing demand constraints in domestic markets. Demand for long steel has remained firm on the back of government's push to fast-track infrastructure projects, and HRC flat has witnessed a price hike of about 1,000 rupees per ton, week on week to 59,300 per ton. Indian markets have slowly started scouting European markets post the rollback of export duty and constraints faced by Turkey to supply to European markets post the earthquake. Near-term outlook seems to be positive with price hikes expected in the coming weeks.
Hence, a firm turnaround for the metal sector hinges on the global growth dynamic. Analysts suggest investors pick companies which are vertically integrated and have good cash flows with well-secured funding for their expansion plans.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.